Welcome to the Investment Update. My name is Marc Grigg. I'm one of the Business Development Managers here at Generate with our lovely Stella Taylor from the investment team. Today we're just going to talk a little around ESG and impact investing. So Stella, with ESG, socially responsible investment, impact investing, these are sort of a lot of buzzwords that go around. What does it actually mean?
Yeah, I know it can be a little bit confusing sometimes, but I guess we'll just start off with the basics about what does ESG actually stand for. So it stands for environmental, social and governance, and it's basically a broad set of criteria that we use alongside traditional financial analysis to identify companies that manage those risks. Yeah, so I guess I'll start off with what environmental factors could be. So this could be things such as energy, water and waste management. Social could be labour management, human capital management or health and safety, and governance could be things such as business ethics, board composition and audit tenure. Responsible investment can also be known as sustainable or ethical investment, which incorporates ESG considerations alongside financial performance into the investment decision and portfolio management. Impact investing is another term used to describe investments that create measurable social and/or environmental impacts while still creating financial returns for investors.
With ESG, how does Generate approach this, and sort of what does it look like on a day-to-day with your particular role?
So we believe companies that manage ESG risks and capitalise on opportunities are better prepared to deliver strong long-term risk-adjusted returns. Take, for example, a company that operates a coal-fired power plant. With increasing investor and regulatory pressure to transition away from fossil fuels, companies with inadequate plans who continue to invest in outdated infrastructure are at risk of having stranded assets, reduced demand, or potentially high cost of capital. These risks can have a real impact on investment returns, and they might not fully be captured through traditional financial analysis. ESG considerations help us to identify companies that are better equipped to adapt to future risks and opportunities, helping us deliver more resilient long-term returns.
So with ESG, are there any sort of companies or industries that we don't invest in?
Yeah, so we have a strict exclusions list policy where we will not invest in companies that are involved in the manufacturing of cluster munitions, anti-personnel mines, and the testing or manufacturing of nuclear explosive devices, the manufacturing of tobacco, or the processing of whale meat.
So with impact investing, is there any projects that Generate are working on currently?
Yeah, so we're actually really proud of the work that we've been doing in this space. So we were actually the first KiwiSaver provider to invest in community housing bonds. This was the Salvation Army bond back in 2020, and we invested $20 million into that, which created 192 new homes for families who previously didn't have stable housing. We then went on to work with community finance even more, and we invested into the Ōtautahi Christchurch Housing Trust Bond and the Verde Bond. This created 35 and 39 new houses for families that had previously been living in substandard accommodation. Overall, Generate has provided 192 new houses for families. We like to think of this as a triple win, as it obviously creates houses for families in need. It creates social benefits where affordable housing and supply of housing has been a real struggle, and it obviously creates a competitive financial return for our members.
Excellent. Thanks so much for joining us today, Stella.
Thank you.
Have an awesome day.